Well, sticking with the Fed, if it keeps hiking, as James Bullard suggested earlier today, can rate-sensitive technology stocks keep on rallying? Our next guests are both sticking with that sector, but they're getting a little bit more selective with regard to what they're picking. Joining me now with where they're putting their money to work is Keith Fitz-Gerald. He's a principal over at the Fitz-Gerald Group, along with Nancy Tengler, CEO and CIO of Laffer Tengler Investments. Thank you both for being here right now. Nancy, we'll go to you first. This technology trade, you think, still has legs?
I do, Don. Thanks so much for having me. It's great to be on with Keith. I do. We have been taking some gains in the previous weeks. We were adding to the group, as you know, in the fall, and continued to add risk into our portfolios. We've really liked those investments, but as they appreciate, we wanted to be sure to capture some of those gains. And so with those gains, we've been reinvesting into energy, but we're still overweight the group. We still think you need technology to solve the productivity problems we're going to have from a very tight labor force. The baby boomers don't seem to be willing to come back, and they don't have to because their financial assets are well above where they were pre-pandemic. So we need technology spend, and that's our theme. Old economy companies embracing the digital revolution and the providers of those digital solutions.
What are those providers, Nancy? What kind of companies are they? Are they cloud providers? Are they cybersecurity providers? Are they, infrastructure and computer networking equipment providers? What exactly enables that trade?
Yeah, so all of the above, but certainly a name like ServiceNow is one of our primary and major holdings. We've owned it's in our 12 best ideas portfolio, along with Microsoft, which is cloud play, among other things, Palo Alto Networks, and we recently reduced our exposure to Salesforce because we got that nice bounce, and we just think there are better places to be. A name like Broadcom, which is in that space and providing not just cloud solutions but AI solutions, and we also own Google for the cloud and AI exposure.
It seems like a pretty revealing theme there. Keith, I see you nodding your head right now. It's got to be because you agree in some ways with what Nancy is saying about the thematic element of that tech trade.
That's the key. Nancy is as sharp as they come. And here's the deal, is thematically is where you got to be. We've created 90+% of all the data in humanity in the last few years. Companies to us like Apple and Microsoft are leading the charge because of all of their work in this area. ChatGPT in particular is a Google killer. Google is on the defensive. Everybody else doing that kind of work is on the defensive because they raised the bar. So to us, this is a matter of going forward with a thematic change that's going to structurally change our world. I think there's plenty of opportunity, but it's important that not all tech companies are the same. Meta and Google are significantly at risk to barbell my conversation.
Okay, so if that's the case, how exactly then does the allocation go, Keith, in your mind? If you're talking about these are mega cap names, they're widely held. They're owned by a lot of ETFs. If you're in mutual funds or ETFs, you probably own these names. Are there ones that are maybe being missed by some of the average investors out there who are just in some of those passive instruments?
Well, that's an interesting question because I think that's a sign of strength, actually, the fact that they are so widely held by not only the ETFs and funds, but the pension funds, the endowments. All of the big money has got to own, trade, or hedge those names because they are so significant to our future. If you're looking at smaller names, I think, ironically enough, you've got to get into defense, which is not commonly thought of as technology. But to Nancy's point, it's small companies, all the way down to your gas stations and your laundromats that are adopting technology, usually coming from the big providers, which is why, to me, you stick with the winning horse, not switch in the mid-race.
Okay, Nancy, we just got through a whole very animated discussion with the panel here about the future direction of interest rates, and it seems to me like the consensus, at least among our panel, was that rates are going to head a little bit lower and kind of stay there, that the highest rates that we've seen are in the rearview mirror for the time being. If that's the case, wouldn't that be a tailwind for technology, or does the economic narrative of a slowdown far outweigh the valuation component of lower interest rates?
So that's the question, Dom. I mean, they sold off last year on interest rates. And if you think about it, a company like ServiceNow, which I mentioned earlier, they were generating 20% earnings growth. So was, or above that. And so was Palo Alto Networks, among others. And so I think one of the things you have to think about when you're entering what we think is going to be a recession, not super traumatic, but a recession nonetheless, you want to own companies that are reliable earners. And if those are in fact in the technology space and you're getting the benefit of lower interest rates, which I do agree with that assessment, then I think you want to continue to use weakness because they're going to chop around here and add to names selectively, especially where you're underweighted. We added to Apple. That's when Keith mentioned earlier this year, and after being net sellers for many years. And so that's the way you want to play it. Adobe was an ad in the fall as well, ServiceNow, Palo Alto Networks. And then when you get an opportunity to trim them back, you do. But if you get more volatility, you add back in. And I think you will get more chances to buy these stocks this year before the third quarter is out.
Opportunities abound. All right, Keith Fitz-Gerald, Nancy Tengler, thank you both very much and enjoy the long holiday weekend, guys.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.